Hey traders, welcome back to the weekly Forex Forecast. Last week we had the ECB and we had the Federal Reserve raising interest rates, and the US dollar on the monthly chart here came back and spiked into the 2015 breakout high. And now the dollar is setting up for a potential near-term bottom and a run back up to the previous highs. And I'm going to show you in today's video why dollar pairs are back on the table heading into next week as good opportunities. Three things to pay attention to in the economic calendar next week. One is the interest rate decision out of Australia. Very important. The Aussie pairs are unlikely to do anything on Monday and then start moving on Tuesday. So I like the Aussie pairs next week. We're going to look at them in today's video, but I like them from Tuesday onwards. And the other two pieces of data are the interest rate decision out of the UK on Thursday and non-farm payrolls on Friday. Now, opposite to the Australian interest rate decision on Tuesday, I like the pound pairs and the dollar pairs for different reasons, because leading into Thursday and Friday, we're likely going to see the pound pairs and the US dollar pairs lacking direction. Very often this happens, especially before an interest rate decision for the pound pairs. But also you see this during non-farm payrolls week, the dollar pairs can be choppy and corrective. But actually, that can really provide good setups, because these markets, especially the dollar pairs leading into Friday, there's a very good chance they hold their ranges that I'm going to present to you in today's video. So I really like the idea of range trading these dollar pairs into Friday and also the pound pairs. And in terms of the Aussie pairs, we're going to be looking at that from Tuesday onwards as a post-interest rate decision trade. Okay, so let's have a look at the scorecards for the coming week, because we have some very clear setups here and some very interesting data points after the interest rate information and also CPI out of Australia was put into the scorecards for the coming week. We can see that the Swiss franc is still the #1 long to the upside. This has been a theme in previous videos and it has paid nicely over the last few months. Anybody who's been on the right side of that Swiss franc long trade. I also like the pound pairs to the long side this week once again, and especially with the interest rate decision on Thursday, any breach of the upper or lower bound in the pound pairs is likely to resolve in a bounce or a reversal near term. Why? Because it's unlikely we get any strong breakout of the projected range in the pound pairs before the interest rate decision. Now on Thursday, when the interest rate decision takes place, yes, we could see volatility in the market breaching these bounds, but between Monday and Thursday, I'm really going to be keeping an eye on pound range trade plays. That basically means, if it trades into the upper or lower bound and starts to reverse. And to the downside here, the New Zealand shorts, that is the #1 theme to the downside. And especially, I'm going to be looking at New Zealand franc next week, pound New Zealand to the upside. We can also look at Aussie franc to the downside, pound Aussie to the upside. And also, I like to the upside the US dollar. Now, you might say to me, but John, this is only neutral. And yes, that's true, but we have a huge jump in the probability scores for the dollar going into this week. And because of, it's not just the absolute score, it's also the momentum we're interested in. The dollar is moving from here all the way across, and what we're anticipating is this to throw over and continue in the coming weeks. So I do like US dollar long plays, and especially with non-farm payrolls on Friday, I do think a lot of the dollar pairs do represent probably even some of the best plays heading into next week, because if we get the markets trading into their upper and lower bounds in the dollar pairs, I think these projected ranges are going to have a high chance of holding before non-farm payrolls on Friday. So just to summarize here, I am going to be looking primarily at Aussie, New Zealand, and also we're going to look at yen shorts versus the Swiss franc, the pound, and also we're going to be looking at those three versus the US dollar as well. So US dollar longs based on the momentum and the direction of travel in the probability scorecards heading into next week. Okay, so let's have a look at the individual currencies before moving on to the markets themselves this week, starting with the dollar. And what I want to do in today's video, I want to show you these individual currencies on the monthly chart. Something we don't do, I usually zoom in and we look at this in a little bit more detail, maybe on the weekly or the daily, but very, very important always to keep an eye on the bigger time frame. And when you do that, you actually see a very different picture emerging. People have been very bearish on the dollar, talking about, the end of dollar hegemony and all of this. But when you look at this, this is simply very, very, very corrective now. And with the retest of the major breakout, it does look like the dollar is finding a bottom technically, and the scorecards going into next week are actually confirming that is in all probability likely the case. And if we get a stronger close up here, you can see with this spike down, we can very, very, very easily be coming back to the high of the year in the 105.88 in no time at all, within a month. And, you know, if we do head into a recession later on, Q3, Q4, Q1, we have had Atlanta GDP data coming out to suggest maybe not Q3. However, I've seen that Atlanta data really get decimated pretty quickly and almost go negative and half sometimes from one report to another. So very early days to be assessing Q3. However, this is the move we should be paying attention to in the near term in the dollar. Next is the euro. Now look at the euro. Again, look at the different picture that's painted once you start to look at the euro on a bigger time frame. We have a huge sell-off down here, and as we currently stand, we simply have a correction. And you can see the very, very, very weak, we've still got one more trading day left, but very, very, very weak close here if this is going to close somewhere down in this area. And it would not take very much at all. Even if the euro was going to continue higher, you would very much expect a right shoulder down here. So I do think we could be coming back to the 1.03750 in a short amount of time over the next couple of months. But here's the thing, even if this is even in the scenario, you're expecting a much bigger breakout to the upside. In my opinion, the macro points to the euro retesting the lows. And this is something I've been discussing with you all throughout the year. Yes, we've been correcting during the year, but I think what you'll find is the difference between these corrective moves, which are choppy and take time, and impulsive moves, and in other words, moves in the direction of the primary trend, you would be surprised that they can happen very, very fast. What takes 1, 2, 3, 4, 5, 6, 7, 8 months to achieve from say here up to here, 1, 2, 3, 4, 5, 6, 7, 8. What takes 8 months to achieve here correctively can actually just take 1 month in order to reverse. So pay attention to this, because when you look at these in the monthly, I think you're going to start to see a much different picture here of the currencies. Next is the pound. We had the flash crash, and I do like the pound versus other currencies heading into next week relatively. But look again at this. You know, this is, as it currently stands, corrective. And I do think we're going to start to head down, especially as the dollar at the very least retests the yearly highs. My view is that if the macro does deteriorate, you know, we can actually be heading back up to the major highs. But the move back up to the yearly highs in the dollar, you know, is likely going to coincide maybe in a retest down in this area somewhere. So keep your eye out for this in the back end of the year. And again, look at this. Technically, we're just seeing a big bear flag here in the pound. Next is the Swiss franc, pretty strong, and we have taken out the target 1.17, which I highlighted at the start of the year. This was the long-term target in the Swiss franc. We've now achieved this. However, look at this in a monthly time frame. This is very, very strong, and the scorecards have kept us on the right side of this. And they are telling us once again we should be looking for Swiss franc long trades, not just next week, but probably heading into next month as well. Next is the Japanese yen. Now, despite the tweaking of yield curve control, we didn't really see much of a reaction in the yen. My suspicion is that the BOJ intervened to sell yen at the same time as this announcement, and that caused a muted response in the yen. But again, if you look at this technically, and the scorecards are still pointing us towards the short side of the yen. And if you look at this technically in the monthly, that actually lines up, you know, the probabilities line up here with the technicals, because there's a very good chance, in my opinion, before we see further upside in the yen, we take out the lows, and down in this area, we start to form a bottom. Next is the CAD. Now, this is a market which I've been saying to you all year is in a consolidation for a bear flag, and we should be expecting the lows to be tested. And again, when we're looking at this on the daily, maybe this is not as intuitive, but when you look at this on the monthly, it's very easy to see that this is corrective. You know, this is impulsive. You can tell by the candles, this is corrective. And momentum, which is what this is, precedes price most of the time. So we should be anticipating this to come down. Now, does that fit in line with the overall macro? In my opinion, yes, because we are looking, although we have currently benign macro conditions, we are looking for them to deteriorate. Why? Because of the longer lead time indicators like the yield curve, which can actually take, you know, 12, 24 months to materialize. Even though the short macro indicators, or the macro indicator with short lead times like initial claims, they are showing us conditions are pretty good now. The economic indicators with longer lead times like the yield curve are still telling us we should expect a deterioration of the macro picture, you know, in the next, say, 6 months, 9 months. Next is the Aussie. Again, you can see this is clearly trending down, and although we've had this really choppy price action on the daily, you can see this is actually pretty 1, 2, 3, and now potentially a fourth very weak close. And I do think the high probability is still down to the low here in the Aussie. This is something I've really highlighted all year, and I think again when you look at this on the monthly now, this does make a lot more sense, or it really paints that picture that we could achieve this. Once this consolidation breaks, we could achieve this within the space of 4 to 6 or 8 weeks. And finally, New Zealand dollar. Now I've left my annotations on here from where we looked at this previously, but again, you can see we had this counter trend move, and actually this is still grinding to the downside. And I still believe as we get the dollar rallying higher from the kind of base where it's at, and again, you know, it may even come down a little bit more and retest the lows. Bottoms are a process, and in the dollar, in my opinion, we've been in that process for a few months now. And at the same time, I think we're going to see the New Zealand dollar back down to these lows as we get that rally in the dollar. So again, looking at these in the monthly, hopefully this gives you a better view of these moves that I've been talking about and expecting pretty much all year, despite the fact we've only been correcting, you know, not just in the New Zealand dollar and the Aussie dollar chopping around, but also in the US dollar. We've been correcting. And I do think the impulsive moves are A, fairly close to being realized, you know, over the next couple of months, and B, they're going to happen fairly rapidly. And I think that could actually take quite a few people by surprise. Okay, so let's have a look at the charts for the coming week, and starting with crude oil. Always start with crude oil. And last week I did highlight this market to the upside, looking on balance for long trades, and we traded right into the max profit taking zone for last week. Coming into this week, I do favor longs on crude oil on balance. So any pullback in this market is going to be viewed as the opportunity to look for an intra-week breakout into the 84 area. Or as always, if we just trend and we don't break out, but we just pull back all the way to the 77 area, this is the second place I would start to look for potential buying opportunities in crude oil for a bounce to the upside. Next is New Zealand franc. Now this market was fairly choppy last week, but that's actually a good thing. Why? Because when you get periods of volatility, you then get periods of consolidation. And after periods of consolidation, what do you get? Periods of volatility. So we could see some nice moves this week in New Zealand franc because of the fact it's been corrected recently. I can either be short or do nothing based on the scorecards. Buying this market is not an option. So any pullback next week is viewed as an opportunity to look for an intra-week breakout to the downside into the 0.5 to 80 area, or if we fail to break out intra-week and we trade right into the 0.5430 area, this is the second place I'm going to look for a potential short next week in New Zealand franc. Next is pound New Zealand. Now pound New Zealand has been very choppy, and don't forget we have the interest rate decision out of the UK on Thursday. Because it's so far back in the week, I am going to be looking at trading the pound before Thursday, you know, hopefully get an opportunity Monday, Tuesday, or even Wednesday. And so any pullback in this market, I'm going to treat this just as any other currency pair we're looking at here. It is going to be viewed as an opportunity to look for an intra-week breakout into the 2.11, preferably before Thursday. Or if we pull back and we trade into the 2.060, this is going to be a great place to look for a near-term buying opportunity in pound New Zealand before the interest rate decision. Why? Because if we trade into this area, we should hold this range as a lack of direction tends to take place, you know, before these interest rate decisions. So I am looking, I mean, if we do pull back, this would be a pretty good short-term range trade. But just bear in mind, if you hold through an interest rate decision, you can very easily see the market blowing out of this range because you do get volatility on those big news events. Next is New Zealand dollar. Now you can see last week how this pulled back right in to the upper bound, highlighting last week's video. And when I talk about buying pound New Zealand, if it trades into its lower bound, this is a classic example of what I'm talking about here. We pull back, we test it, and this becomes a great opportunity to sell New Zealand dollar to the downside if you're looking at that. Of course, we had the Federal Reserve and everything else, but you can see how well this worked last week as an area to look for a short in New Zealand dollar. So going into this week, I can either sell this currency pair or do nothing. Buying this market next week is not an option for me. So I'm going to be looking for two things. We've already got, you can see this consolidation breakout here. So any pullback is going to be viewed once again to look for an opportunity for an intra-week breakout down to the 0.6060. Or if we fail to break out and we hold the range and we pull all the way back, just as over in this area last week, the 0.6250 is going to be an area, once again, I'm going to look for a potential short in New Zealand dollar next week. And bear in mind, with non-farm payrolls on Friday, it may be the case we get a lack of direction in the dollar pairs. So these kind of opportunities usually do much better in the lead up to interest rate decisions or big news events because the markets tend to hold their ranges before those events take place. Next is Aussie Franc. Now these markets are all in blue because we have the Australian interest rate decision. So just bear that in mind. I'm going to be looking at trading these from Tuesday onwards, and I want to see one of two things. I can either short this market or do nothing. So I'm looking for this to consolidate into the interest rate decision. And if we get a big sell-off on the interest rate decision, I'm going to be looking for a pullback and a follow through down to the 0.570. But if we pull all the way back, maybe after the interest rate decision, I can only still sell this or do nothing. I cannot go and buy the Australian dollar versus the Swiss franc, regardless of what happens in the interest rate decision. You know, if it's very, very bullish for the Aussie, then my choice is to do nothing because I can either sell it or do nothing. You know, buying is not an option. But if we get a pullback, this is a great area, the 0.5870, to start to look to potentially fade this from after the interest rate decision. But again, as I say in these videos, if you are looking to fade an interest rate decision, you know, the least risky one is when you're trading a follow through in the direction of the decision. Make sure you don't have an extremely bullish catalyst for the Aussie. You know, if they come out and they smash interest rates up by 5%, don't try and fade, you know, the market from this area because it's extremely bullish for the Aussie. So as long as you've got a pretty much as expected news event and you get a little bit of volatility spike, you can look to fade this afterwards. Next is Pound Aussie. Just bear in mind we have the interest rate decision on Thursday as well out of the UK, but look at this really nice momentum. So any pullback in this market is viewed as an opportunity for one of two things. Either we break out on Aussie dollar weakness on the interest rate decision, and I'm going to be looking for a follow through into the 1.9550, or we pull all the way back into the 1.90750 roughly. And this again, as long as there's not an extremely bullish or hawkish catalyst from the Australian dollar interest rate decision, this would be a great place to look to start to fade that interest rate decision for a short-term bounce in Pound Aussie next week. Next is Aussie dollar. Again, we have the interest rate decision, but look how nicely the lower bound held this market all the way after this sell-off, all the way right into the lower bound and the max profit taking zone for anybody who was short this last week. Coming into this week, I can either sell this market or do nothing. Buying this market is not an option for me. So any pullback, I'm going to be looking for a breakout on the Australian interest rate decision, and then any pullback for a follow through into the 0.6540. If we come all the way down here, this is where I'd be looking to book profits to try and capture, you know, those booking your profits, you know, at the most extended area of the market next week. And conversely, if we pull back perhaps after a bit of a non-event interest rate decision and we test the 0.6750, this would be the second place that I'd be looking after this kind of breakout and pullback. This would be the second place I'd be looking for a potential short in this market next week. Remember, all of these trades are post the Australian interest rate decision, and they all revolve around Aussie weakness from that decision, or at the very least, not a very, very bullish response from the Aussie. Next are the yen pairs. Now the yen pairs last week sold off really hard because we got an initial rally in the yen. Why? Because the BOJ tweaked the yield curve control program, moving the upper bound effectively from 0.5% to 1%. And of course, this is bullish for the yen. But what we saw was the yen strengthen and immediately reverse. And this is where I think we saw intervention from the BOJ to sell the yen and to prevent this from, I mean, here we're looking at, you know, franc yen. So this is the Swiss franc declining versus the yen. So you could think of this sell-off here as yen strength. So I do think the BOJ stepped in, intervened to sell yen, you know, and actually weaken it. And going into next week, based on the response, I do actually like this market further upside. So any pullback in this market is viewed as an opportunity to look for bullish breakouts intra-week into the 164.50 area. And of course, again, if we come all the way back down to the 159.50, this is the second place I'd look for a near-term bounce in this market next week. Next is pound yen. Again, you can see this very, very strong whipsaw. The yen strengthens and then it immediately weakens. And this is where I think the BOJ intervened to push it back up. And going into next week, I do like the pound versus the yen, and leading into the interest rate decision on Thursday, any pullback is viewed as the opportunity to look for bullish breakout intra-week into the 184.250. And if we pull back and retest the 178.50, this is the second area I'll be looking for potential buy in pound yen next week. Next is US dollar yen. Now, with the muted response from the yen after, all was said and done last week, and with the US dollar really strengthening the scorecards, although it's neutral, really strong momentum behind it, I do like this market further upside next week. So any pullback is going to be treated as a potential bull flag for a breakout into the 143.25. And if we pull back and retest the 139 area, this is where you can also look for a potential bounce to the upside and short-term trade in US dollar yen. And the final Forex pair here is euro dollar. And not only last week did the US dollar strengthen in the scorecards, the euro weakened. And you can see we traded through the lower bound last week. And this is actually a sign of strength to the downside. So going into this week, I do like euro dollar to the downside, and I do think this is going to be one of the better markets to be looking at next week. It's not highlighted in gold, just based on what the scorecards are saying, but keep an eye out for the dollar pairs because I do think these could set up nicely next week. So any pullback in this area is viewed as an opportunity to look for bearish reversals into the 1.090. And of course, if we pull all the way back and retest the 1.1120, that is going to be an area I'm also going to be interested in looking for a short in euro dollar for a near-term sell-off in this market next week. Okay, so wrapping up the video with gold, silver, and Bitcoin, starting with gold. Now, because of the strong momentum in the dollar, I do favor shorts in gold, silver, and Bitcoin. So any pullback in this market is viewed next week as the opportunity to look for this breakout of a potential bear flag into the 19250. Or of course, if we hold this range and we just continue to trend and we pull back into this area, I'm still only going to be looking for shorts in gold from roughly the 1992 area if we can come and trade into here, looking for that short-term sell-off, just like we looked at in New Zealand dollar earlier on in the video. Next is silver, nice momentum to the downside. So again, I'd be looking for this initially just to form a bear flag and a breakout intra-week into the 2360. But of course, if this trend holds and we don't get a breakout and we hold, especially if we come back and retest this high, I'm going to be looking for a near-term short in silver from the 25.1 area roughly. And last but not least, we have Bitcoin. I don't have a very strong opinion on Bitcoin because it's kind of chopping around, but I am looking for shorts in Bitcoin or doing nothing next week. So any pullback is going to be treated as a potential bear flag breakout into the 28,000. Or if we pull back into the let's say the 31,000 area, this is another place where you could look for a near-term short in Bitcoin. However, I do think there are better markets to be trading next week than Bitcoin, and it's unlikely I'm going to trade Bitcoin personally next week. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.